As Mark Twain once said, "Buy land, they're not making it anymore." Welcome to U.S. Real Estate Uncovered. We're here to dive deep into the intricate world of real estate, providing you with insights from top industry leaders and shedding light on the nuances of market trends. From forecasts to investment tips, we'll present a comprehensive perspective, helping you navigate through the waves of the dynamic real estate market. Stay tuned as we unravel the complexity of the U.S. real estate market. We begin by hearing from those at the top, the leaders who shape the industry. These are the minds that have mastered the intricacies of the U.S. real estate market, the men and women whose insights and predictions are sought after by both seasoned investors and young hopefuls alike. They come from diverse backgrounds, each bringing their unique perspective to the table. The first expert we hear from is a veteran in commercial real estate, who sees a shift towards more sustainable practices in construction and property management. Next, we have a rising star in residential real estate who believes that the trend of urban exodus, spurred by remote work, will continue to shape market dynamics. Lastly, a seasoned investor shares his views on the impact of changing mortgage rates on investment strategies. Their viewpoints may differ, but they all agree on one thing: the U.S. real estate market is a living, breathing entity, ever-changing and full of opportunities. As we can see, expert opinions vary, reflecting the dynamic nature of the market. Now let's decode the complexities of the U.S. real estate market. Let's start by tackling some key terms. Real estate refers to land, as well as any physical property or structures on the land. This can include homes, office buildings, and structures that are both physically and legally attached to the land, like a driveway or a pool. Next, we have market value. This is the price at which a property would trade in a competitive auction setting. It's determined by factors like location, the current state of the real estate market, and the condition of the property. In the realm of real estate, we often hear about buyer's market and seller's market. A buyer's market is when there are more homes for sale than there are buyers. This scenario benefits buyers as they have more options and can negotiate better prices. Conversely, a seller's market is when there are more buyers than homes for sale. This tips the scale in favor of sellers, who can often command higher prices due to increased competition. Now, on to mortgages. A mortgage is a loan taken out to buy property or land. The loan is secured against the value of your home until it's fully paid off. If you can't keep up your repayments, the lender can repossess your home and sell it to get their money back. Real estate investment is another important concept. It involves purchasing real estate with the expectation that the property will generate income or profit upon resale. This can be achieved through rental income, appreciation, or both. Lastly, we have property valuation. This is the process of determining the economic value of a real estate investment. This can be done through various methods, including sales comparison, cost, and income capitalization approaches. Understanding these fundamentals is the first step in navigating the real estate market. Real estate, like any market, experiences cycles. Let's dive into them. Market cycles are natural, recurrent phenomena that can significantly impact the value of real estate. Generally, we can identify 4 distinct phases in these cycles: recovery, expansion, hypersupply, and recession. Recovery is the first phase, where we see the market begins to stabilize after a downturn. It's characterized by low property prices and decreased demand, but it is also a time of opportunity. As we move into the expansion phase, demand grows, property prices increase, and construction projects begin to pick up. This is often considered the golden age of the real estate cycle. As we transition into the hypersupply phase, construction projects are completed and hit the market, often leading to an oversupply. Prices may still be high, but they're starting to level off. Finally, we enter the recession phase. Overbuilding and declining demand lead to falling prices and increased vacancies. These cycles are not set in stone, and their duration can vary greatly, but understanding these phases can provide valuable insights. It's about recognizing the signs and patterns, and then making strategic decisions accordingly. Remember, the key is not to predict the future, but to prepare for it. Understanding these cycles can help in making strategic decisions at the right time. Predicting the future is no easy task, but let's look at what experts forecast for the U.S. real estate market. As we navigate our way through the second half of the 2020s, experts are laying out their predictions for the direction of the U.S. real estate market. There's a consensus that the real estate market will continue to expand, albeit at a slower pace than we've seen in recent years. The reasons behind this are manifold, ranging from rising interest rates to demographic shifts. Many industry gurus point to the rise in remote work as a key driver of demand in suburban and rural markets. This trend, they argue, is likely to stay even as we move past the pandemic era. It's causing a shift in the housing landscape, with more and more people opting for homes with ample space and green surroundings over cramped city apartments. On the flip side, some believe that the urban market will bounce back as people start flocking back to cities for their vibrant lifestyle and ample job opportunities. This could lead to an uptick in demand for city real estate, pushing prices higher. In the rental market, experts predict a steady growth. With homeownership out of reach for many due to soaring prices, rentals will continue to be a viable option. So, what's the takeaway? The U.S. real estate market is poised for growth, but the pace and nature of this growth might surprise us. While forecasts can guide us, remember that the market can always surprise us. Entering the real estate market can be daunting. Here are some tips to help. Let's start with the basics. First, educate yourself. The U.S. real estate market is a vast ocean of opportunities, but it's crucial to understand its ebb and flow. Read books, attend seminars, join real estate forums, and stay updated with latest market trends. Next, establish clear goals. Are you investing for cash flow, capital growth, tax benefits? Your goals will guide your investment strategy, so take some time to define them. Now let's talk about location. Location, location, location. It's been said a million times because it's true. Look for areas with good schools, low crime rates, and convenient amenities. These factors can significantly influence property value. Once you've found a potential location, conduct a market analysis. Look at the average rent, property values, vacancy rates, and local economy. This will give you an idea of the property's potential return on investment. Choosing the right property is another crucial step. Single-family homes, multifamily homes, commercial properties, each has its own pros and cons. Consider your budget, risk tolerance, and management capacity when making your choice. And then there's financing. Mortgages can be a great way to leverage your capital, but they also come with risks. Shop around for the best mortgage rates, and make sure you understand all the terms and conditions. Once you've secured your property, management is key. Whether you're renting out the property or flipping it for a profit, effective property management can make or break your investment. Finally, don't go it alone. Build a team of professionals, real estate agents, lawyers, accountants, property managers, who can provide expert advice and help you navigate the complexities of the market. Remember, real estate investing is a marathon, not a sprint. It requires patience, diligence, and a dash of courage. But with the right approach, it can be a rewarding journey. With these tips, you're better equipped to venture into the U.S. real estate market. The U.S. real estate market is a complex yet rewarding landscape. Let's recap what we've covered. We've taken a deep dive into the intricacies of the industry, guided by expert analyses from top leaders. Unraveling the complexities of the market, we've shed light on its dynamic nature and how best to navigate its cycles. We've peeked into the future with a comprehensive forecast, providing insights into market trends that could shape the sector in the coming years. We've also armed you with practical tips to make your entry into the U.S. real estate market smoother and more successful. Throughout this journey, we've emphasized the importance of understanding the market's nuances and staying abreast of its trends. The real estate market, with its cyclical nature and multifaceted aspects, can be a daunting field to navigate. However, with the right knowledge and foresight, it can be a rewarding venture. Whether you're a seasoned investor or a newcomer looking to dip your toes in, having a comprehensive understanding of the market is key. It can help you make informed decisions, mitigate risks, and ultimately maximize your returns. Remember, knowledge is power. Stay informed, stay ahead. Thank you for watching U.S. Real Estate Uncovered.